Welcome to FST Media's live webinar series. My name is Rimin Dutt. I'm a financial technology journalist, and I'll be your host and moderator for today's virtual panel discussion. Our topic for today is the transition from transactional to relationship banking. We have a great group of industry thought leaders and experts joining us today who will share insights on how financial services organizations can implement an effective omnichannel strategy, how to deliver personalization and consistent customer experiences, how disruptive technologies will reshape the financial services industry in the next 12 to 24 months, and some other key trends. We are very pleased to have with us today Mr. Sriram Srinivasan, who's the Asia Pacific Head of Digital Platforms and Channel Operations at HSBC, Mr. Matt Surridge, Head of Business Consulting at Genesis Asia Pacific, and Mr. Boru Kago, Head of Digital Delivery at IAG. Welcome to our panelists, and thank you for joining us. Before we start our discussion, I'd like to quickly share a few housekeeping notes. Our webinar today is designed to be interactive. There are a number of ways you can participate. For those on a computer, you will see various tabs on your screen, like adjust volume, ask a question. We'd encourage you to direct questions to our panel. We do have about 10 to 15 minutes at the end of the discussion to answer any queries you have for our panel. You will also see some live poll questions appear on screen intermittently. You can submit your answers and vote right by clicking on your screens. And at the end of the panel discussion, there'll also be a survey. We'd really appreciate it if you could please share your feedback with us. So without further ado, I'd like to kick off with the first question for the panel. If I can ask Sriram to start us off with that, and then Boru and Matt. How can financial services organizations keep up with the rapidly evolving customer expectations? Sriram?
Hi, thanks, Rimin, and good morning to everybody. This is indeed a massive challenge for financial institutions as it is for everyone else, because customer expectations are now baselined on the best in class that they see every day on their mobile phones or through any other media. So essentially, in a nutshell, what financial institutions have to do is, in order to keep up with customer expectations, is we will need to get ahead of the game in terms of technology, in terms of customer experience, and also in terms of really understanding our customers' needs better and making sure that we provide them with relevant products and services at the appropriate time. This is a large topic, but in the interest of time, I'll just leave it here and pass it on to my fellow moderators. Rimin, back to you.
Thanks, Sriram, and welcome everybody to the seminar. So, look, customers have a massive choice these days in terms of how they get information, and they're coming to us better informed. There's been a sort of transition of power from business to consumer over the few years, and that's really accelerated this year in 2015. Our customers are constantly connected. The Internet of Things is starting to become more mainstream with wearables and in-home connected devices such as TVs, fridges, fire detectors, and more. As a result, we're collecting more data, and when used well, the personalisation can deliver great customer experiences. Particularly in Australia, there's been a rapid adoption of mobile, and it's given their consumers access to a wide range of product information and services. It's never been easier. I guess the other thing, it's never been easier for our consumers to switch or exit from our shop windows. So our customers are no longer comparing companies with some products and services alone within the industry verticals, but they're comparing their experiences against what they're having when they're interacting with games, apps, other industries, and in-store digital experiences. It means we sort of no longer need to look primarily at our competitors to determine where we need to go and how we think of innovation. We need to start thinking about innovation coming out of the likes of Fitbit, Uber, and Nest. These things have nothing to do with our industry, but they've sort of got everything to do with our customers and our clients' expectations. We sort of look outwards into adjacent to evolve and create innovative ecosystems that can sort of promote top culture and inspiration. So to keep an eye on this, we need to sort of structure organisations to be able to be agile and nimble and quickly respond to changing customer or market behaviours. We really need to find ways to be closer to our customers and really get the feedback loops a lot faster so that we can sort of create products and services that are relevant to the customers that we need.
Thanks, Boru. It's Matt Surridge here. I think what we're seeing a lot of is, the key term in this question is, evolving customer expectations. It's not about digital, but that's a big part of it. But what I think a lot of organisations that we see in financial services are forgetting the fact that, very worried about how they provide great digital experiences, but forgetting about the baseline experiences that they're providing every day, day in, day out now. And I think we need to take those experiences and make sure that they are delivered in a way that meet the customer's expectations in the areas that it actually matters the most to the customers. And I think, it's very easy. There's so many things out there that an organisation can focus on, but what we really should be doing is looking at the areas that the customer's expectations are being let down the most, and bridging those gaps in the areas that it's actually going to make a difference to their dealings with your organisation on a day-to-day basis. So I guess one customer expectation would be that the phone doesn't beep in the middle of the next question. So that's me done. Thank you.
Thank you. Thank you, Matt. I'd like to move to the next question now on digital revolution. And I'd like to ask Boru and Sriram this question. How is the digital revolution changing the game for banks and insurers? And where is your organization in its transformation journey? Boru?
Thanks. I think the first thing is to understand the speed and the threat of this revolution and the disruption that it's happening. We only need to look at Uber and the speed in which that came to market, and then it's impacted a lot of industries. So, if it was founded in 2009, they released an app, I think, the following year. By 2012, they started expanding, and by mid this year, the company was valued at $50 billion. So the pace is sort of phenomenal. We've sort of understood, been working for some time around the need to evolve and transform. If we sort of went back a couple of years, the cost of IT was increasing, our ability to deliver large-scale change at pace to our customers was difficult, and new companies and disruptors entering our market. So across IAG, we had pockets of teams that were sort of developing leading digital solutions, both in our direct and intermediate businesses, but we hadn't brought these together to share knowledge and really to leverage our scale. We've recognised that our ability to become an organisation that is customer-led and data-driven is critical to that. As data is becoming the most important asset for large companies like IAG, and our ability to use it to give customers what they need is a core part of our strategy. Earlier this year, we formed a division called IAG Labs, and this brought together a number of existing IAG technology teams, digital teams, project management functions, information analytics, and our venturing team who sort of developed new incubator ideas that will sort of chase previously untapped digital opportunities. This has sort of seen us move towards, in terms of a model, a continuous delivery approach, and so we've had to embed a DevOps operating model to support that. We're aligning our business capabilities and our technology platforms together so that everyone understands our business and our customers and we move in sync. So already this year, there's a number of successes. We've launched a number of new innovative products, including Insure Like, Share Cover, and Insurance for that, to respond to the changing needs of our customers' behaviours. So we've really shifted the dial, I guess, in terms of where we were and to what we need to be. And a key part of that is driving the culture that we need to be able to do things, even as a large organisation, in a sort of really agile and fast way. Because the impacts are coming from the market, and there's competitors and startups are operating in a different way, and they're our competitors these days.
Thank you, Boru. Sriram?
Hi.
Your view on where your organisation is in its transformation journey?
Right. So HSBC has, at the highest levels recognized that digital is not just a strategic priority, but it is essentially the way in which this bank is moving. And this is it's public information. You can see it on the HSBC corporate website. It's been in investor presentations and so on. So HSBC is publicly committed to digitizing the business end to end, and this is driven both in response to customer needs and also to improve efficiency within the organization. And these commitments have already been presented to shareholders, to market analysts, and so on. You can even look up the investor updates which went out in June 2015. Very aggressive goals have been set for in terms of precise numbers that HSBC is going to be achieving. You can look it up online. I won't bore you with all the detailed numbers, but in a nutshell, you can see that there is massive commitment to digital and there's also massive pressure on digital delivering both in terms of customer expectations and in terms of transforming business efficiency, bringing down operating costs, and essentially bringing our overall expenses back to the level it was quite a few years ago. And based on this, HSBC has already gone ahead. We've invested heavily in terms of bringing in people from not just other banks, but also from leading digital organizations, be they Google or Amazon or Apple. And we've put together cross-functional teams that are executing very, very aggressively against these strategic targets, and you will all be seeing the results shortly. So I would say in a nutshell that HSBC is well on the way towards a digital transformation that's going to radically transform both the customer experience and the way the organization operates. Back to you, Raman.
Okay, thank you, Sriram. That's very interesting. And we talk about the transactional approach and moving to a more customer-centric approach. What is really needed for financial services organizations to move from that transaction approach to digital? If I can ask Matt and then Sriram for your views again. Matt?
Yes, thanks. I think one of the keys to move from a transactional based to customer experience or relationship based is to actually truly start to look at the ability to flow with the customer's journey. Platforms like internet banking and now mobile banking allow the customer to very easily go online and do their day-to-day banking. But from a relationship perspective, that's fine 90% of the time. 10% of the time, the customer actually needs to speak to the organisation or actually interact with the organisation. And what we see in the market is, very few financial institutions allow you to move from, in a natural way, from being transactional to being, in a more relationship mode. So if I'm online on my mobile app or within my internet banking platform, for example, and I've got a question about something that I've seen there, I have to then either log out of that and walk into a branch, or I need to pick up the phone and call the contact centre, and none of the history of what I've done, none of that's actually passed directly through. Now, there should be the ability, and this is basic foundational sort of steps which we're not seeing organisations do, is if I'm in my mobile app, logged in, I should be able to push the button within the app and I should go straight through to the contact centre in an area that can actually help me based on what I was actually looking at within the app itself. So, building that customer experience approach has to start from the ground up. And I think, the challenge a lot of organisations face is they're trying to design this at a macro level from end to end when starting with some of the basics and building those relationship steps out is the right way to go.
Yeah, just adding on to what Matt said, and I think that's perfectly valid. I would like to add on to that, and of course we do need to look at the customer experience and the front-end design and how information flows seamlessly. But the even more critical thing which I'm discovering and which I think we're putting in place is that we also need to take a look at processes end-to-end, and what this means is there is a radical transformation even in the way in which we operate. So sometimes, the back-end processing or the operational processes for, say, a credit card account opening or for a credit check or for a mortgage application process, etc., needs to be looked at, and this is actually happening. It needs to be looked at end-to-end, and putting the whole customer experience in front means not just the bits that the customer sees, but also like an iceberg, what the customer sees is the tip of the iceberg, but this is all driving operational processes and back-end checks and and a lot of other processes which the customer doesn't see, but those also need to be changed and need to be. And the good news here is by adopting digital aggressively and by adopting this customer experience focus, we find that we can get massive efficiencies even in back-end processing. So it's a win-win synergistic situation where we need to look at the customer experience and also re-engineer our back-end processes. Hope that answers. Raymond,
That's
back to you.
interesting. Yeah, that's interesting, Shriram. Thank you. I'm wondering, are there any new rules of engagement in this customer-centric and digital era? So what you've just talked about, those are really key points. But I'm wondering if there are any specific things or rules that you have to absolutely follow. So could you pick up one or two, if I can ask Shriram and Boru?
Let me go first. I think the first rule, I would say, is not even a rule. It's almost common sense. That I would call it one word: simplicity. How do we make sure that things are really simple for the customer to understand, to operate, and the customer can move ahead and make a transaction or move ahead with their banking need without a complicated set of questions or something that satisfies the bank. So that first rule is simplicity. And this rule sounds very simple again, but actually we find that making things simple is probably paradoxically the most complicated thing to actually achieve. I won't belabor the point there, but that's the first rule. The second rule, I think, stems from the first, is to add on to the simplicity point would also be, how do we reduce the amount of information we ask from the customer and try to look at things which already exist with the bank, so never ask for the same thing twice would be the second rule. And I would say possibly the third rule is relevance. What I mean by that is, when a financial institution asks for something from a customer or provides something to a customer, given the amount of information that already exists with the bank, we need to make sure that it is relevant to the customer's need at that point in time, and it's something that the customer will actually appreciate. And this goes back to our basic foundational principle of knowing our customer better and doing it in a smart manner. So those I would say are the three major rules. Hope that helps.
Thank you, Shriram. Boru, would love your view on this. Are there any rules? And if so, yes, what are they?
I think following on from the simplicity part, the holy grail here is that technology becomes invisible and customers design their own engagement model per each engagement. So what that really allows is for the customers to interact with us not only when they want and how they want, but also with the phone they have at the time. If you think about the user who's on a train as opposed to a user who's sitting at his desktop, a user after dinner, or he's on his phone, first thing when he wakes up in the morning. It's the same person, but they're all different personas, and they want to have a different experience. So if we can get to a stage where we understand that, we can make that transparent to them and deliver them a highly personalised experience. I think that's sort of the holy grail that we should have target towards. Again, it's just really about understanding customers and partners and delivering these one-to-one personalised experiences. So the key things for that is, one is when we develop these propositions, we need to bring the customer into that process. So develop with the customers as a partner. And the second one is really relies on us becoming a custom insights and driven businesses. So we understand the customer data, we use human-centered design, and it's really the foundation of everything that we do. Thanks.
Thank you, Boru. I'd like to move on to the next topic of challenges now. What are the key challenges of implementing and managing an integrated omnichannel engagement approach? Because integration is a word that comes up a lot when you discuss different channels. So, and I'd like the entire panel to address this. So, Matt, you could kick us off, and then Boru and Sriram.
Yeah, I guess it's a huge question that could probably take the rest of the day. But so I'll cut it down to a couple of things which are pretty brief. I think an integrated omnichannel approach. I think omnichannel as a point of difference between multi-channel, must be integrated. You must have visibility of what a customer's doing from one channel to the next. You must be able to hand them off clearly and cleanly. You must be able to identify the customer in multiple channels, which I think is one of the key challenges. And I think, the integration part, I think Sriram mentioned before, integrating into the back-end processes and making sure the back-end processes are right. I think that's a key challenge because there's no point delivering a great looking custom omni-channel experience for the customer if they're let down by the end result on the back end. And I think it's different from country to country across the region, but things like organisational maturity, splitting out roles and responsibilities, and actually being able to get an organisation to the point where they can actually deliver a truly omni-channel experience can be a very, very difficult thing. So I guess they're a couple of the key challenges that we're seeing on a day-to-day basis.
Thank you, Matt. Boru, would love your view, given that insurance is a different industry and has its own nuances. What are the key challenges in implementing an integrated omni-channel engagement approach?
Yeah, sure. Look, the customer journey is increasingly complex, and we know that the attribution model doesn't work where we sort of look at a linear journey where it's, one impression is one device, one click, and one conversion. So, few people actually respond directly to one single device and make that purchase decision. And people are now using, I think the research is 90% of internet users show that there's more than one device that accomplish the task over time. The key challenge that we've really got is how do we follow the customer from one screen to another to a branch and attribute the right score to the right device or the right channel. There's some new technologies that are emerging to sort of help us start that, but the big piece is really, we're still going to integrate these into our data warehouses. We're still going to integrate them into our CRM systems and our digital analytics platforms. But really what it's about is how we actually tie the data and all the information together so it makes sense when we have the correct platforms to deliver both the inbound and outbound experiences. The other parts that I think we briefly touched on around the sort of the business considerations around implementing omnichannel is if your organisation's KPIs and the digital and traditional channels aren't aligned, it can sort of lead to channel conflict, sort of the wrong type of behaviours can carry out. So if you really nail the right channeling strategy, then you align both the digital and bricks and mortar strategies around that. It's a massive starting point. It's also it's pretty important to keep an eye on what your proposition is. If a product or service that you're in the market evolves to a more pure or digital product, the pure digital disruptors don't have the bricks and mortar considerations, and it can allow them to rapidly develop their digital offerings. It's also balanced again where the traditional channel is able to offer an in-store experience that's enhanced by the digital channel. An example of this would be, if you put beacons in stores or branches, the real-time recognition starts to integrate the physical outlets with the digital personalisation for seamless cross-channel experiences. So it's a fairly massive topic. It's a big piece of work, and it takes organisational process, technology, and a variety of people involved to make it successful.
Thank you, Boru. Sriram?
Yeah, just adding on to that, I think all the points Boru mentioned are really, really valid. Adding on to that, I would say specifically to a bank, the first, so I see three major categories of challenges. So the first one would be, as everyone knows, banking is highly regulated and there are very, very specific ways in which we need to interact with customers and to collect information and so on. So the regulatory framework presents a big challenge, and this is a challenge for banks to solve on how do we stay completely compliant with both the letter and spirit of regulation, but still provide our customers with best possible experience, especially digitally. So that I would say is the first major challenge. The second major challenge is, again, in terms of there is always a trade-off between security and convenience. So walking that trade-off and making the best and innovative solutions where we do not trade off too much security at the expense of convenience, or we should make it so convenient that security is being compromised. So how do we trade off between security and convenience? That I would say is the second major challenge. And probably the third challenge is what I would call organizational inertia, where essentially we have institutions that are probably 100 years old, which are used to a certain way of doing something. How do we transform that and move the organization towards a more customer-friendly and a more customer experience orientation? So these, I would say, are the three challenges that banks face in making the customer experience even better? Back to you.
Thank you, Sriram. I'd like to move to the next topic about personalization and consistent customer experience. How can financial services organizations, and I'm directing this to Matt and Sriram, how can banks deliver consistent customer experience and personalization in an omni-channel environment, given that to these days customers can interact in physical and online channels?
Yeah, I think this very much ties back into that last answer we had then, and I think one of the keys to personalisation is customer identity. So being able to collect the customer identity and understand who they are at any point within that journey is the absolute number one key to being able to provide any personalisation, regardless of what the channel is. Some of those are easier than others. When you've got a customer moving from a secure channel to another channel, secure channel like online to a contact centre, that becomes a little bit easier. I think the key in terms of how you deliver that in an omnichannel environment is then actually having, omnichannel isn't necessarily just about how I move from one channel, how the customer moves from one channel to the next. It's about the organisation having a corporate memory of what the customer did in that journey to get to where they are today. So if they've had 3 to 4 to 5 interactions across different channels to get to the point where they're actually speaking to somebody either on the phone or in the branch or whatever it is they're doing, you've got to be able to use that information in a way that's going to be to help you predict what it is that the customer is actually going to be wanting, and then deliver a personalised experience based on that, catering for the fact that may not necessarily be what the customer is actually wanting, and be able to be flexible enough to deliver the right experience if that's the case. Number one is identity. Number two is, omnichannel is not just about, what's happening now, but it's about remembering what's happened in the past, and then being able to leverage all that information together and information from other systems to actually deliver the right experience for the customer at that time based on their past history or likely next requirement. Thank you. Pass it on.
Thank you, Matt. Sriram?
Yeah, and adding on to what Matt said, so in addition to, so Matt's theme was in terms of data and how do we make sure it's all seamless and connected up, which is absolutely critical. And I think, and this is a bit counterintuitive coming from a digital guy, but I think it's also really, really critical that we focus on digital and self-service interactions, but also on physical interactions. So when a customer walks into a branch or calls a contact center, how do we make sure that A, we present complete context to those channels and also train them up? So there are two parts to this. One is making sure that at the point of contact, the information that a frontliner requires is available to them, and be it through a staff tablet or through some, probably on their own mobile devices or on their customer service screen, and also make sure that this seamless personalization and consistent experience is ingrained behavior. We need to invest also in training. It's not enough to just provide the information. We need to have the information presented back to the customer in the right way. And that's a huge effort, but it is certainly worth it, because that then gives the customer the experience, the seamlessness of the experience. And to Matt's point, it shows that the organization has a proper memory and that the organization cares about the customer.
I doubt this.
Thank you, Sriram. I'd like to discuss the results of the first polling question. So we had asked our audience, where is the organization in its digital transformation journey? And the options were, we haven't started our digital transformation journey yet. Our digital strategy is still in its infancy. We have sound social, mobile, analytics, and cloud strategies in place, and we are providing customers a fully personalized and integrated omni-channel engagement. So those were the options, and you're just looking at the results here, and you should see them on your screen too. So we have about 50% of our audience selecting our digital strategy is still in its infancy, followed by we have sound, social, mobile, analytics, and cloud. The industry likes to call that SMAC strategies too. There's an even voting for digital transformation journey and personalized. So I would love the panel's view on some of these polling results. Would you like to, Sriram, would you like to take a stab on what you think of these results? Is this across the industry in your view, or does this vary from different regions?
I think I'm really interested in the little red line which says, 15% of people say that they're providing customers fully personalized and integrated omnichannel engagement. That's great. It would be interesting to know which is the audience completely a banking audience, or do we have from other industries as well?
It's varied across banking and insurance industry.
Okay. So I would say in many cases the digital strategy is probably not in its infancy. We have strategy. The essence of probably the crux of the issue is more around execution. We all know what the right things are to do, but based on the challenges I spoke about earlier, it takes time, especially in very large organizations, to execute that strategy and execute it in a very seamless way and put it back in front of customers. So I think it's largely, I would say I agree with the results. I'm not so sure if banks would skew the same way. They would probably skew slightly lower than this. Back to you.
Thank you. Matt, would you like to also add to the results? Was these results surprising?
No, not really. Like Sriram, I'm interested to know what specific industry the 14% comes from, because across the board, that I'm seeing that's a little higher than what we'd see. I think where we're seeing is I think it's how people define what digital strategy is, and if digital strategy is an end-to-end vision of where your organisation is going to be in 3, 4, 5 years time. What we do see is that there's probably a lot of organisations that are at that point where they've got that vision. It's as Sriram said, it's the execution on that vision that is taking people time to actually do. But we're certainly seeing a lot of organisations that are picking off bits of their digital transformation as they go along, and so yeah, across the board we would see that adds up to what 65% roughly that are sort of in the starting phases would probably be about right in the financial services industry.
Interesting, thank you. I'd like to move to the next topic now about social and mobile delivery. So that was on the polling question that received the second highest number of votes. I'm wondering, how do you build customer trust in social and mobile delivery channels? Boru, if I could ask you to kick us off, and then I'd love Sriram's view also, because the two industries are slightly different in terms of their nature and how you engage your customers in the social channels. Boru?
Sure. So I think you need to understand that firstly that social is a social contract with your customers. So it's really important to respect that, because it takes a long time to sort of build up and gain that trust in a social context, and it can take one tweet or one Facebook post to really put some reputational damage there. So as an example, if you sort of have a branded social community around safety, now you wouldn't want to turn around every second tweet or post and start promoting your services. That would sort of defeat the purpose. In social, people are very transparent and can see through things. So again, it takes a lot of dedicated time and effort to gain the customer trust, and it can be undone pretty quickly. The sort of aspect of social servicing is quite interesting, and again, it's providing the customers the choice of how they want to interact with you. They know that if they, going into Twitter and interacting that way, they can do it in 160 characters. They can probably get a faster turnaround than some of the other channels that are available to them. So customers are sort of taking those up now. So there's a variety of stages that organisations are at in each of those. I've seen full-blown online Facebook branches to some people just responding to tweets and some people just social listening. So I think social servicing is going to become a lot more built into our models, and are evolving all the time, and they're really going to be ingrained and an important part of the customer journey. If you look at the different platforms, I guess you've got Facebook, Twitter, Instagram, they each have a different place in the social puzzle, and it's important to for everyone to be playing with these both in a business and a personal context to get a feel for what each of them does. At the moment, I've started looking at Periscope, which is a live streaming app that's become a sort of popular way of streaming live events. A lot of companies have started to use this in the US and particularly in Europe around the announcement of products and special offers that they have. They have live Q&As, and also they've used it to have insight into companies' cultures and what's going on. So, there's new things coming up. It's always worth having a look at what these are and playing with them and sort of understanding what context this has to my business and what context will it have to my customers, how will they respond to that. Thanks.
Thank you, Gaurav. Sriram, would you like to please add from a banking perspective how you build?
Sure, yeah. And yeah, I kind of echo whatever Boru said, and probably a personal experience or what I've seen in many places is social starts off kind of as an offshoot of marketing, and it's all about providing customers with more and more information about products and services, while then comes the realization that actually it's the other way around. Social is the best way for us to figure out what our customers want, and the key to winning on social media today is to be very responsive to customers. So and let's face it, mostly people do tweet or blog or go ahead and post on Facebook about their negative experience, but not necessarily about their positive. So we need to accept that for a fact upfront, be prepared for that, and when someone comes up with a negative experience, take that in a spirit of, I would say, humility, get back to the customer immediately, try and post a follow-up on that, and then use this to address customer concerns. So essentially, I would say social is more of a servicing channel than a channel to market, and it may evolve to marketing, and we could have excellent experiences around creating buzz or launching new products or building viral campaigns. But we also need to put more emphasis on service and on addressing issues, because the key thing about social is it's very easy for that to spin out of control unless we have a clear strategy in terms of how to address servicing issues through social media, and then move on to sales and marketing. Hope that answers. Oh, back to you.
Thank you, Sriram. That's great. Thank you. I would like to talk about disruption now, because that's the word that everybody is scared about in the entire financial services industry. What disruptive digital technologies are likely to reshape the industry in the next 12 to 24 months, and how can you extract maximum advantage from these technologies? The way we're using disruption is not the fintech companies that'll threaten the financial service industry, but disruptive digital technologies that you may be looking at that will redefine the industry, really. So I'd like to ask this question to Matt and Boru. Matt?
I guess a better way to answer or ask that question maybe, or answer that question is, how are we going to adapt to the disruptive technologies of the last 24 months that are already there, that customers are using en masse, and incorporate those into our day-to-day customer experience and customer servicing platform. Those platforms aren't going away. Most financial institutions to date are using those in a sporadic or rather narrow way, and how we, and picking up those technologies and adapting to them are going to probably service more customers today, and then be looking for potential disruptive technologies that are coming forward that could actually be transformational and get some cut through quicker. Especially the banking side of things, which is which Sriram has mentioned a couple of times, is highly regulated, and security versus convenience is a huge factor. Disruptive technologies aren't necessarily going to be adopted or adaptable into the financial services markets directly, and there are disruptive technologies that have been in play that haven't been fully taken advantage of yet. So I guess it's rather a backward look on future question. I'll pass it on.
Yeah, thanks. Look, I think it's a relevant point. What's in the market now, and there's always a potential that the biggest disruption in the next 24 months, could be on stories around on walls and on code in someone's GitHub in a garage. So, you need to certainly keep an eye on what's coming up or what's not here now, and what the impact that will have. A few things that we're sort of taking an active interest in, certainly from a traditional insurance perspective, is obviously the driverless cars. So, when driverless cars enter the mass market, it's going to disrupt a number of industries, from manufacturers, taxis, Ubers, delivery business, and as well as insurance. But the best way to look at disruption is actually to look at the opportunities that it's created, and that's why it's so important for organisations to be able to adapt and respond quickly to these threats. The other thing is blockchain's fairly interesting. It's a new thing. It's providing an opportunity in this particular services to change the way we do business and the way that we store, access and secure data. Bitcoin's the most common platform that uses the technology, but I know that a lot of the fintechs and some large financial services are starting to experiment with that now and what it could bring to them. Certainly the transaction security through the cryptography is certainly interesting. And insurance, as an example, what does that mean in terms of how we pay claims or interact with our supply chain, etc. There's a couple of things that haven't really been fully leveraged yet. I think voice cognitive computing services, utilising voice to text, text to tone, and tone attribution as an example. I think there's some opportunities there. For those who use Siri, you'll notice the advancement in the voice recognition there and how it improves the functionality on your phone. So large companies have terabytes of voice data, and it's a whole new opportunity for us. So there's a few that we continue to look at, and obviously we still keep an eye on, as part of the labs, there's areas that are sort of looking out towards the future and the horizons beyond, the next 5 years in terms of what are the things that are coming and what may it mean to us or how may it disrupt us. Thanks.
Thank you, Boru. We have some time now for Q&A, but before we move there, just a reminder for the audience, we have the next polling question on screen in front of you. We'd really appreciate if you could submit your answers. And the question is, what digital technology or trend do you see as being the biggest game changer for financial institutions in 2016? We do have one question that has come through from our audience, and I'll direct it to the entire panel. How do you create an anticipatory culture in a large financial institution serving many customer segments and markets and also facing regulatory constraints? That's an interesting question. Matt or Sriram, would you like to address that?
Sorry, I missed the first part of the question. Yeah, thanks.
Okay, I'll repeat the question. How do you create an anticipatory culture in a large financial institution serving many customer segments and markets and also facing regulatory constraints? Actually, Sriram, this question is a great one for you because HSBC is obviously a large organization and operating in many different regions.
Sure. I missed the word. Did you say anticipatory culture?
Yes, anticipatory culture.
Okay, I'll try and interpret the question first. I mean, I'm assuming what the person means by anticipatory culture is how do we anticipate a customer's need and be proactive and relevant in our communications to them. So I'm going to assume that that's what the question meant, and my apologies if that's not what the question actually was. If that is the case, then yes, it is something that is really, really important. And as I mentioned probably earlier in answer to some of the previous questions, the good thing about banks is that they already know a lot about the customer. They've got enormous amounts of data about customers in general and also about you specifically. And so in theory, if we could pull all these various sources of data together, I won't use the word big data because that's been overused now, but essentially pull all these various streams of information together, look at what other people have done, what other customers have done in similar scenarios, and then I can pretty much be in a situation where I can predict what's going to happen next, when customers are going to run out of their credit limit, or when they're coming close to it, or when they're going to be, if we would be able to predict a lot of life events if we look at our data deep enough, and if we build seamless channels and ways to communicate it back to our customers, then we could be anticipatory, as the person who asked the question put it. While this is easy to say, it takes enormous efforts to connect all this data together to make sure that we are not violating any regulations around privacy, and we're doing this in the best interest of the customer and not necessarily pushing stuff to the customer that is important to the bank but not necessarily to the customer. So that's where the challenge essentially lies. But I think the spirit of the question is definitely the right thing for us to do, and that is when the customer really starts feeling that the bank cares about the customer more than going beyond just treating you as a account number, but treating you as an individual and as someone who really cares. Hope that answers the question. Back to you.
Thank you, Sriram. Boru, if you could add, again, from an insurance perspective, because it's a different dynamic entirely in terms of regulation. Insurance is a very heavily regulated industry, and the kind of data that you have also is very extensive. So how do you create that culture in terms of anticipating the compliance issues, as well as the culture to really meet all the needs in a large financial institution?
Well, I think there's a couple of aspects to that question. So one is you need to continually to look at how you disrupt yourself as an organisation and evolve the organisation. So that's so that to be anticipatory, sort of how do you get used to change being the new norm? So you need to consider, where you are on that level of maturity and what you need to do to get to a level where you can happily move with the market trends and those sort of things as a large organisation. Part of it, that comes with really aligning technology and business teams together so that they get a common understanding of what they're doing, and it will help them sort of move quickly. In terms of the regulation, the regulators, this is all new to the regulators as well. The cloud computing has just come on, it's been there, but it's just come on massively. All the different technologies that are coming out there, you look at Uber, the government, how they respond to that. So the only thing you can do is understand what is the risk, keep working with the regulators around what you're trying to achieve, what their concerns are, how we go about it, and they'll come on the journey with you. And then it's understanding, what is the data that you need to protect, what is the data that is not so significant, and what are the technologies that are able to do that. So it's a whole matrix of things for consideration, but the key thing is really the agility that you have as an organisation, how you can move and how you can change. Thanks.
Thank you for your answer. Just a quick reminder to the audience, to submit your questions, you only have to click on Ask a Question tab on your screen. And you can see how to do that on the screen slide in front of you. We don't have any other questions at this point, so I'll go back to discuss the results of our second poll. And the results will be on your screen in just a second. So the question we had asked was, what digital trend or technology do you see being the biggest game changer for financial institutions in 2016? So at quick glance, it looks like 46.2% have voted that the implementation of analytics and predictive analysis of customer behavior would lead the biggest trend, followed by the convergence of mobile, social, data, and cloud. So again, I'd like to direct any comments on this to the panel. Are these results in line with what you anticipate?
Sriram, Sorry. I think this is completely in line. So if I look at, the first result in terms of analytics and predictive analysis of customer behavior, which is pretty much what I was talking about in response to the previous question. So it's a question of how do I use information that I know about you, or it comes down to the same thing, know your customer, and know your customer better and better, provide them with what they want. And probably the SMAC, which is a nice acronym, SMAC, is a good segue to the previous point where, okay, I know about you and now I can feed this back to you when you want it at your convenience through mobile, social, data, and cloud. So yes, I think these two are definitely critical, and it's up to us to figure out how do we connect them up seamlessly. Back to you.
Thank you, Sriram. Boru and Matt, would you like to please comment on these results?
Sure. I think everyone's obviously looking at data now, and it's now that we've had the data, it's now putting the data science across that, and how do we actually get that information, and actually provide real-time personalisation. I think that's the challenge at the moment. So everyone's doing that, so I expect that. The Internet of Things, it's emerging. I think we'll probably see a bit of an explosion of that next year. With more and more connected devices, and then obviously mobile social, SMAC, that's underway at the moment. I'm surprised at the introduction of wearable technology of where that is. And I'm not sure how that will play out or where that will land. So I think I'm pretty much in agreement with the audience here that it's really around information analytics. But I'm certainly interested in the in wearable technologies and where that lands.
Thank you, Boru. Could you elaborate on that? Sorry. Please go ahead.
Sorry, no, it's curious that 15.4, I think I remember the answer to the previous question. Again, the red line was at 15.4%. Introduction of wearable technology, and I think the previous one was about we've already reached the pinnacle of digital. So it's an interesting coincidence that those numbers are exactly identical.
Yes, that is interesting. So I'm wondering and Sriram, if you can comment on that, how will smart devices and Internet of Things likely impact the game for banks and insurers in the years ahead? And, every day we read about new wearables, and they include something new every day, like a smartwatch or even a skin patch, and they're talking about Google Glass is already something that's been on the market now. So how will that really change and of course, the challenges that come with that for banks?
Right, yeah. I think, this is really interesting. So I had given a presentation, I think, earlier in FST at the Hong Kong conference where we looked at, how things move from an emerging technology and then it goes through a kind of a life cycle and then gets into pretty much mainstream. So if you look at digital itself, it started off as, websites were a very emerging technology, and now they're the single source for any kind of information you want. And then same with digital banking and then mobile banking. So I think Internet of Things, okay, let me not speculate too much about that, but if I look at wearable technology, so I would say they're slowly coming in as emerging technology. I see everyone wearing cool watches which are smart, and they will make an impact, but whether they will make an impact in 2016, especially in banking, I'm not so sure. But will they make an impact? Will that become a primary channel? Like, will alerts get served onto your watch? Probably yes, but maybe not in 2016. That's my gut feeling. While definitely there will be pioneers who go out there and we might try a few experiments on it. It may not go mainstream in the next year, but over the next few years, certainly. I would see the evolution of channels to get closer and closer to the customer, and that's a trend that will continue.
That's interesting. Thank you, Sriram. Boru, would love your view. Again, we keep hearing that telematics is a huge area for insurers, and again, smart devices could track anything from your driving habits to your health and your vital health statistics. What's your view on what will be the biggest game changer? How do you see smart devices and Internet of Things impacting insurers?
Yeah, well, I think telematics has sort of been around a while and experimented a while with a number of insurance companies. Obviously, it starts bringing in opportunities around, insurance as you go and those sort of things. So I think everyone's playing around with telematics and what it means, and particularly with other technologies that are coming in. How can it be part of the journey, not the only part of the journey, not a pure telematics product, but how can that actually interact with us with other things that we do? I think the wearables is really interesting, particularly around if you look at the human nature, if you look at Google, and everyone Dr. Googles themselves. So if the wearable technology can actually start sending alerts and doing other things, it will totally change the way that health insurers look at people, the way that people eat, the food they have, potentially. I don't know. That's why I'm really interested to sort of see where it goes. But what it's also going to do is it's going to give us massive amounts of data once we start getting wearables, because it's there all the time in real time. So we're just collecting, we would be collecting massive profiles of people's and human behaviour and where they go and how they shop and what they do based on a number of different pieces of data. It's going to get interesting about how that data gets collected, how it gets aggregated, who gets access to it, and how it's used. But I think it just provides a whole range of different opportunities everywhere you look at it. Like in terms of smart meters, in the houses, what does that mean to building and contents insurance, micro usage-based models, and it really goes when you start coming into play. If you've got driverless cars and you've got telematics and you've got different models. What does that mean for our industry, and what do we need to be thinking about doing? Thanks.
Thank you, Boru. Matt, what's your view? You come from a very technology-heavy background. What's your view on smart devices? What surprises do we have in the future for us?
I think sort of echoes a couple of the other comments before, but it may not be this year, but they are going to play a role moving forward. I think as we assess any technology, whether it's wearable, whether it's mobile, whether it's social, we need to understand, is it going to make it easier or the customer or the experience better for the customer? So, if I can integrate wearable devices into my overall customer experience platform as a bank or as an insurance company, and I do that in a way that it actually makes it easier for the customer in their day-to-day life, that could be from anything to accessing service through to providing information to one of those organisations in order to get some advantage for me as a customer, then it makes some sense. And I think what we probably will see organisations do, and we're starting to see this sort of globally, is start to build little small incubation, I suppose, is the best way to describe it, groups within their organisations to start trying this technology, but trying it from a perspective of the customer and understanding what applications it has in that organisation for making the customer's life easier or better in dealing with that company. And I think if we take that approach, what we generally tend to see is those organisations actually get innovation to market faster than those that are sort of sitting back and actually not understanding or not trying to understand, the core principle, which is, how is this actually going to enrich the experience our customers have in dealing with us on a day-to-day basis. I think we see too much dabbling in technology for dabbling in technology's sake without actually applying the customer lens back over the top of it.
Thank you, Matt. That's wonderful. Unfortunately, we're out of time now, so I'd just like to take this quick minute to thank our panelists and thank your audience for your valuable time. We really appreciate it. You can download any resources or the slideshow from the panel's first slide. So I think at this stage, I'd like to wrap up. And again, thank you everyone for joining.